Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
You sound like you've maybe been a little sick. Something's off in your voice.
Yeah, I caught something, probably from my youngest. Who knows what these kids bring home, but I was kind of down for the count for about 48 hours. And then I love that feeling when your immune system starts to take the lead. And you're like, oh yeah, here we come. And then I also had some antibiotics left over from the dentist. It's like dropping bombs on that thing.
Okay. Well, welcome back and happy 2025. Because it's still new in the year, and I know predictions are a thing, and the market has not been off to a great start, but felt like a good moment to actually still talk about what might happen with a little crystal ball.
Yeah. Everybody has predictions in the sell side. It's like, oh, the market has a 40% chance of going up, and it's so opaque, and I don't know, it's like safe. There's a couple people out there that make very specific predictions, and they end up going back and like saying, was I right or wrong? I love that because you don't get that a lot from a lot of the prognosticators out there. This guy, Nate Geraci from the ETF Store, fellow ETF nerd, veteran of the industry, has 5 predictions every year. And these are really interesting predictions. I agree with 3 of the 5 only, Joel, but I think it's going to be fun to unpack these because they all really tap into some huge themes that we're probably going to cover the rest of the year as well.
So joining us on this episode, Nate Geraci, president of the ETF Store. He's also the host of ETF Prime, another ETF podcast, as well as Vildana Hajric of Bloomberg News. She's a cross-asset reporter. This time on Trillions, Nate Geraci's predictions for 2025. Nate, Vildana, welcome to Trillions.
Thanks for having us.
A pleasure to be here.
Okay, so Nate, you've been doing predictions since 2018, according to this little helpful memo. You started really strong. You were like 5 for 5. But then last year, ever since then, things have been kind of trending downward. And last year, 1 for 5. Why should we listen to you and your predictions?
Well, first of all, I will say from 2018 to 2022, I went 19 for 24 or 25, which is pretty darn good. You're right. The past 2 years have been brutal overall. Actually, I've gone 2 for 10, though I will say, and Eric knows this, I did predict last year that spot Bitcoin ETFs would obliterate every single ETF launch record, which I clearly nailed that one. That should be worth at least an extra point or 2. But Joel, I feel good this year. I'm ready to get back on track.
Okay, well, past performance not indicative of future performance, as we know. Eric, tell us about Nate, because you go on his podcast a lot, right? Like, what stature does he have in the industry?
Well, I met him because I heard there was this like radio show about ETFs that was delivered through ESPN radio or something. And this was back in like 2009 when it was very nascent industry. And I listened to it, and it opens with the Who's Won't Get Fooled Again. You know, that it's a great intro. And I was like, who are these guys? And they came in from like the Midwest, and they would go back and forth about ETFs, and I was like, oh, this is great. But what made them extra level was they are managing money. They are advisors. So they have that interaction with the actual investor, which to me helps their opinion of ETFs actually resonate more. And so I think both of us in separate places, me in Philadelphia, him in Kansas City, sort of like saw the ETF as being a big deal, early. And so we had that sort of kindred spirit. And then when I met him, it was obviously like, mutual appreciation society.
All right, Nate, you're going to drop your predictions on us, and then we're going to comment on them. And we'll try and be friendly about it, but maybe critical too. Okay, let's hear your first prediction.
Okay, prediction number 1 is that either the iShares S&P 500 ETF, ticker IVV, or the Vanguard S&P 500 ETF, ticker VOO, either one or both will chop fees this year in an attempt to capture the ETF crown.
That ETF crown belongs to?
SPY, the Spider S&P 500 ETF.
Okay, so within the S&P 500 ETFs, you're predicting this is a year that it's going to get fierce, even fiercer.
Yeah, and look, people have predicted for several years, including myself, that either IVV or VOO would overtake SPY in assets, but that's not my prediction here. I think that having the largest ETF by assets actually means something to these issuers. And the way that I would lay out this prediction to you is I spoke with BlackRock's Rachel Aguirre back in December. And she told me that the iShares Bitcoin ETF, which we can talk about crypto in a minute, but she said that was attracting a lot of new investors who were then actually looking at other iShares ETFs. So in other words, the Bitcoin ETF was serving as like a magnet to bring in investors who then bought other iShares ETFs. I think it's a similar situation with these S&P 500 ETFs, right? If an investor chooses, say, IVV, I think they're much more likely to look at other iShares ETFs, and the issuers know this. And since these ETFs all do the same thing, they invest in the S&P 500, I think it really comes down to fees. And so I think one of these issuers is going to chop fees because they want that ETF crown.
But aren't the fees already just barely existent? Like they're so cheap to begin with.
Yeah, they're 3 basis points. I don't think investors really trust 0 or want 0, but 2 or 1 maybe. I think it has to be BlackRock. Vanguard probably doesn't need to do it. And I've actually advised them, instead of cutting fees anymore, put that money towards customer service next time you have that extra profit that you need to spend. But I could see BlackRock doing it. I think, so I agree with this. Probably, I definitely agree that VU will take over SPY this year. Right now, VU is 95% of the way to SPY. At the beginning of the year, last year, it was 90%. It makes up 5% every year, so do the math. It's probably going to pass it this year. IVV probably can't catch VU in this because they don't take in as much flows. So they, to me, if they cut the fee, and BlackRock is very motivated by beating Vanguard, I could see IVV cutting the fee. Then you may see Vanguard tie. I could see it. So I'm 80% I agree with the fee cut. I'm 100% that I think VU will pass SPY this year.
A wild card that's out there is SPLG, which is the Spider Portfolio S&P 500 ETF. So we call this mini SPY, and its expense ratio is only 2 basis points. So it's actually cheaper than both IVV and VU, and it finished in the top 10 of ETF inflows last year. I just don't think that iShares and Vanguard like a competitor being out there who is lower cost. The other thing I'll mention, I agree with you, Eric, in terms of Vanguard allocating money towards technology and customer service, but that Vanguard flywheel, it's like they can't help themselves, right? We know that as their funds grow, that allows them to further leverage their back office economies of scale. That allows them to run the fund even cheaper. And then they pass those savings on to investors with Vanguard's mutual ownership structure. I just think you have to assume that as VU grows, they're going to reach a point where investors will get a fee cut. I think it's a matter of time. So maybe I'm cheating a little bit with this prediction because I just think that's going to happen.
My only counter to that is they're really pushing their active move because they were late. And they may choose to use that to cut the fees on those funds. To be the cheapest.
Vanguard, you mean?
Vanguard, yeah. But again, we'll see. If BlackRock cuts, I could see Vanguard responding. But again, we're at 3 already, maybe 2. I think once you get to 1 or 0, it starts to look like gimmicky. Like the customer's almost like, I don't want to I don't want to pay nothing because then I got to worry about how you're going to screw me somewhere else.
Vildana, what do you think?
I have a couple thoughts. One is just conversationally based. Like if I'm talking to non-market civilians, maybe we can call it, like my high school friends.
Yeah.
If they're talking about the market, they say, I'm buying VU. Like I never hear IVV in conversations. But the other point that Nate makes in his predictions is that even if they do cut, one way for them to offset is through securities lending, which a bunch of these issuers do. Maybe almost all of the issuers do. So that's one way for them to make up for cutting the fees, which is really interesting. It's an interesting trend. But if SPLG already is at 0.02, it's been like that for a while. Why change
anything, right?
If VU or IVV wanted to cut, why haven't they yet?
Yeah. So take that, Nate.
Take that, Nate.
Okay, we'll see what happens. Okay, prediction number 2, Nate.
Okay, prediction number 2 is that this will be the year of crypto ETFs. Notice I'm not saying spot Bitcoin ETFs. That was 2024. I think 2025 will be the year of crypto ETFs. And I have 10 predictions. I won't go through all of these, but they range everything from Spot Solana ETFs will be approved. To Vanguard will allow clients brokerage access to spot Bitcoin and Ether ETFs. Spot Ether ETF staking is approved. It's really a cornucopia of predictions here that I think all tie into a huge tailwind behind crypto ETFs.
So do you think, to kind of summarize, are these going to be coin-specific ETFs, or are we going to start to see the indexing of crypto into a product?
I think it'll be both. So I think we will see spot Solana ETFs, spot XRP ETFs. There are filings from both Grayscale and Bitcoin for index-based ETFs. I think we're going to see everything. And I'll just tell you in a nutshell, really this is all one huge bet on the Trump administration, that they're actually going to deliver on their campaign promise or the innuendo that we heard that they're going to be pro-crypto. And if you look right now, the early indications are that they will, right? We have Paul Atkins set to succeed Gary Gensler as SEC chair. He's clearly viewed as being pro-crypto. David Sachs, who he runs a VC fund. He's thought to be very tech savvy. He's filling this new crypto czar role. There's also a crypto advisory council being formed. The point here is that it does look like the Trump administration will be much more supportive of crypto. And if that's the case, then I'm highly optimistic on all 10 of these crypto predictions, or I should say 9 of 10. The Vanguard one we can talk about. Not quite as confident there.
Yeah, I agree with that. He says 50 launches. Yeah, it's going to be like, it's instead of the Cointucky Derby was just Bitcoin, it's going to be like this all-out like derby. Yeah, universal altcoin derby. It's going to get crazy. Now, a lot of this stuff is just going to get ignored. I mean, still think Bitcoin ETFs take the lion's share of this category. But, you know, one of these coins is going to have a nice run and going to be like the playful thing for a minute. But it's still going to be predominantly Bitcoin bringing in the big boy flows.
So are you 2 for 2 with Nate? Or are you like, is it 1.5 or
No, I'm going to agree with this one too, except number 10. So I guess I'm 1/10.
This is the Vanguard
Vanguard
part.
capitulates and allows clients brokerage access to spot Bitcoin and Ether ETFs. I think it happens. I just think you're early. I think it's going to take a little while because remember, Vanguard's pretty proud, and they came out and said we don't like this. It doesn't. It can wreak havoc in portfolios. It has no real world usage, and they let GLD trade. That's a total slap in the face to Bitcoin. The crypto people are so pissed off by this, and I tell them, listen, she's just not that into you. You know what I mean? Like, you got to get over it. Because they're like, no, Vanguard will bend the knee. And I'm like, what are you talking about? Vanguard doesn't need you. So
Vanguard's not thinking about you?
They're not thinking about you. Yeah, it's like that meme. So, Joel, I think in time, Vanguard may relent simply because if Bitcoin becomes a strategic reserve for the U.S., if there's more advisory assets in Vanguard that demand crypto as part of the portfolio, if Salim Ramji has more time to like grow his influence there, I know he launched iBit at BlackRock, so the new CEO there is clearly a fan. There's a couple things that will germinate. I just think they take longer than a year, Nate.
Okay, Vildana.
Joel, you should know any time that I'm wrong on a prediction, I always say I'm just too early. Eric knows that. And Eric and I tend to be very early on a lot of predictions that we end up right on.
Say, I don't do these, but I do bets with Todd Rosenbluth. That's my version of the predictions. And I'm early. I've never been wrong. I've just been early.
But Nate himself in his prediction cites Howard Marks saying being too far ahead of your time is indistinguishable from being wrong. So being too early could mean you're wrong.
Okay, yeah. So no rebuttal, Nate. That's what you get. Vildana, what do you think of more crypto ETFs this year?
Think I agree with Eric and Nate in that we'll see, like throw all the jargony words in. Covered call, 0 DTE, inverse, leverage, 2x,
That's
3x.
all coming? And it's all coming this year?
You'll see all kinds of weird stuff.
Oh, God.
I don't know about the Vanguard part. I mean, I'm going to trust what Eric says here because he's like the Vanguard whisperer.
Okay, Nate, now go ahead. Proceed with your rebuttal.
Okay, so Eric said the magic words, which is Salim Ramji, the new Vanguard CEO. So before he came over to Vanguard, he was instrumental in moving the iShares Bitcoin ETF forward while he was at BlackRock. And look, it's one thing for Vanguard to not offer their own spot crypto ETFs. That's perfectly fine. But it's another thing to treat clients like they're kids, like they can't have ice cream or whatever. And I think Salim knows that. he can't just withhold access to these products. I think Vanguard will capitulate on this decision to gate access to crypto ETFs. And the other thing that I would say is, like myself, I love Vanguard's investment approach. I personally invest in low-cost stock and bond funds, as do our clients. But I also like a little crypto, a little hot sauce, as Eric calls it.
Don't pander to him.
I don't think I'm alone.
Yeah, don't pander to him.
Right.
It's
Well,
okay.
I just think Vanguard is actually alienating younger investors who view crypto as a normal part of a portfolio. And at some point, I think that's going to impact their business. And I think somebody like Salim's going to see the bigger picture.
Okay. All right. Speaking of bigger picture, private markets. What's your prediction, your third prediction?
Yeah, so private credit ETFs received a tremendous amount of attention last year. There was this filing from State Street for the SPDR Apollo public and private credit ETF. And a lot of people in the industry are saying this is going to be the next big thing. I just can't get my head around this and how this will work. And very simply, what State Street is trying to do is partner with Apollo, where Apollo would be the sole liquidity provider. In other words, they're going to be both the buyer and the seller of the private credit for this private credit ETF. They'd obviously determine the value of this stuff as well. That seems like a clear conflict of interest to me, right? If they own private credit that they believe, say, is overvalued, how do we know that's not what they're selling to State Street? Or vice versa, if State Street needs to redeem shares, how do we know Apollo isn't buying the most attractive private credit out of the ETF, especially if you were in a market where it's under duress? So I just think this whole thing is simply a conflict. And I'm telling you that the SEC hates conflicts of interest like this. So even if we have a more lenient SEC under the Trump administration, I just don't see them getting comfortable with this. And then the other piece that I'll add here is private credit is by definition private, right? Because it doesn't trade on a public exchange. It's essentially a liquid, whereas ETFs are daily liquidity vehicles. And so you have a true mismatch here. I just don't see how that can work where you put investors' best interest first.
We have to add, so Bloomberg reported a month ago that Apollo is already, the desk that they have set up to try to facilitate the creation of this ETF is already up and running. They're already trading this stuff.
I mean, I think Nate's point about being conflict of interest, it's a good point, and there's been some people saying that like Apollo will be able to dump all the stuff they don't want to actually own into the ETF. But I would think that State Street, to me, is the offset of that conflict of interest. That's who's on the label. And State Street is going to make sure that their investors don't get screwed. So I trust State Street enough and their 2-year history of running ETFs well. And I just don't want my crap any other way. I want it in an ETF. You may say that privates are better in an interval fund or even a mutual fund or a hedge fund, but I don't trust any of those. I don't want to pay that money. And right now I'm in a character of all the investors. I'm not actually me. That's how investors have decided to, that's what they've been showing with their feet. They just want an ETF. And Nate, there's plenty of illiquid stuff in ETFs currently. There's times where stock markets close in the ETF trades. HYD, which is high yield munis during COVID, traded at 29% discount. I think ETF investors would rather have this in an imperfect way with discounts or stretched arbitrage bands and even a potential for conflict of interest than go to some interval fund. And I will show you proof. The XOVR, which is the private equity, public equity crossover fund that owns SpaceX, has 10% SpaceX. That has $200 million already. That's double Cathie Wood's ARK Venture Fund, which was launched at the height of ARK Mania, and that has $100 million, but it's an interval fund. That's like making a great album, but you're only putting it on 8-track cassette tapes. Who's going to buy it?
So, but Nate isn't saying that this ETF will never come, right? He's just saying it won't come in 2025.
Well, he's saying that this filing as it is. I'll bet you. I will bet that the Apollo State Street ETF will launch this year.
You're betting Nate?
Yeah. Steak dinner?
I will take that,
okay,
bet, because I stand behind my predictions. Here's my question, though. Where do we draw the line, right? I think we would agree private credit is a liquid. So what else can we put in an ETF wrapper? Is it art, baseball cards,
yes.
Wine?
Yes.
Where do you draw the line?
So I just think ETFs sometimes trade like closed-end funds in crisis. I just think you're going to see a situation where ETFs become hybrid closed-end funds, and they just trade away from the NAV, but people are like, I'll take that over getting screwed on these other kinds of vehicles.
Do we still think this is the next big thing, Nate?
I don't. And part of that is I'm not so sure that the average investor really needs access to private credit. I would make that argument right now that that's a frothy area of the market in general. But even if it wasn't, I don't know that the average 60-40 investor needs the ability to access private credit. I don't know what this really adds to a portfolio other than complexity.
Doesn't adding Bitcoin to your portfolio also add complexity?
Or a ton of crypto?
That's a fair point, but I would say Bitcoin is a much more transparent market.
Okay. All right.
A lot more liquidity there.
Paying it forward in some sort of prediction. Let's hear number 4, Nate.
Okay, prediction number 4 is that 351 exchanges go mainstream. And this definitely gets in the weeds. So
I don't even know what that
describe
means.
this. Okay, so in December, an issuer by the name of Cambria launched this Cambria tax-aware ETF. And basically the way that
Good
this
ticker,
worked was
tax, right?
It's a great ticker. The way this worked was that investors of a certain size, so they had to be a bit larger, they could contribute their individual stock portfolio into the ETF. Okay, so they provide their individual stocks to Cambria, and in return, they receive shares of the Cambria ETF. At a high level, this is called a 351 exchange. And there are a lot of nuances to this because you're dealing with a tax code. But as long as these investors met certain criteria, this was not a taxable event. And so let me just give a real quick example. So let's say an investor owned a portfolio of Tesla and NVIDIA and MicroStrategy and some other stocks that have gone up a lot and where maybe the valuations are elevated. Well, that investor may want to reduce their risk now. But the problem is if they own those stocks in a taxable account, they obviously have to pay taxes if they sell. So what this 351 exchange allows them to do is diversify into an ETF, and then they can defer taxes until when they sell the ETF shares. Plus, they get all the benefits of the ETF wrapper, right? The tax efficiency and low cost and all of those things. So my prediction is that we are going to see more issuers pursue this. I think this is going to become pretty popular.
So, and do you think it's more relevant for people who have been acquiring shares of late, or do you think it could be more impactful for people who say like have owned Microsoft since the 90s or Apple?
I think more impactful for people who have owned shares for a while, but I think it just depends on the composition of the portfolio. I also think this is going to be more applicable to higher net worth investors, right? Investors who have a higher net worth, they're probably in a higher tax bracket, they have a larger portfolio. This is going to make more sense. I also think this could make sense for some advisors who are running separately managed accounts.
Advisors will tell you, or I'm not sure if Nate will agree, but I've heard that real rich people hate paying taxes more than they actually like getting like good returns. And so I think avoiding taxes is there's the demand there. And there's an ETF from Alpha Architect called Box, which does, I won't go into it, but it does a tax maneuver. And I think it's got 4.7 billion, and that's from a small indie issuer. There's going to be tax innovation in the ETFs, and I agree with Nate on this one. I think we'll see more of this.
Vildana?
I love this. I love tax. I think this is the big theme, the big story, the ways that ETFs are being utilized to help offset your big tax bills. The one caveat is that tax, the ETF that Nate was talking about, it has already launched, but it only got $31 million, which isn't huge. It's a nice sum, but it's not huge. So we'll see how that grows, if it grows. But the guy behind all of these, including Box, the one Eric just mentioned, is Wes Gray. And he's really, his white label company, ETF Architect, is really like coming up with these ways or innovating the way that people are doing tax aware conversions, if we can call them, from SMAs or, family office stuff, hedge funds into ETFs. So I think it's very interesting. I love it.
Are they going to balk at anything, Nate? Like if say like I bring them something from, somewhere in my portfolio, like they don't have to take anything, right?
Yeah, there are some very specific rules and requirements in terms of how you conduct these 351 exchanges. So you can't just take any portfolio and do this with. And to what Vildana was saying, with the 30 million or so into the Cambria tax-aware ETF, I think a reason for that is, and that's not bad, but I think a reason it's not more is there is a huge educational hurdle surrounding all of this. There's a lot that investors and advisors have to get their head around.
So let's just try and make your prediction be a little bit more specific, which is,
okay,
you say the 351 exchanges go mainstream. Can you actually put something quantifiable there for us?
I will say 5 ETF issuers who we all know will pursue this approach. Okay. And as a matter of fact, I saw last week Alpha Architects, so that's the ETF side of ETF Architects white label, they're actually launching one of these. So I'm cheating a little bit. So we'll say 4 others.
Okay, all right.
4 other issuers.
Eric, are you 4 for 4 right now?
No, I didn't agree with the him saying the Apollo. We already bet a steak dinner on it.
So. All right. So 3 for 4.
3 for 4, though.
Okay. Number 5. Nate, go ahead.
Okay, last prediction is that a leveraged single stock ETF implodes. And what this comes down to is that issuers are launching a boatload of leveraged single stock ETFs on the most popular companies, which if you think about this, that makes sense from the issuer's perspective, right? Because they want people to buy their ETF, they need interest. And so of course they're gonna pick the most popular stocks. The problem is that a lot of these stocks are also many of the high flyers. So again, it's the micro strategies and NVIDIAs, Teslas, right? Palantir. And I'm not here to make any investment calls. I'm trying to make ETF predictions, but there is absolutely a case to be made that some of these companies are significantly overvalued. And even if we put that aside, so let's put the valuations aside, these stocks are very volatile. If you look at something like MicroStrategy, this thing moves around a tremendous amount. And so I just think it's a matter of time before one or even more of these stocks drops 50, 60, 70% over a few days or a week. And if you just do the math on that, that would be enough for one of these leveraged ETFs to implode.
And your point is that there's going to be one, at least one or one?
I'm saying one, but I wouldn't be surprised if we see more than that.
So I disagree with this one, but not enough. I don't feel strongly enough to bet a steak dinner, but I lightly disagree. I just think in this Trump era, especially with limit up, limit down, a stock can go down 7%, right? Then they halt it. And I just see the Trump administration leaning on the Fed and basically like coddling the market. So I don't see a stock having 50% drawdown in like 3 days. If I'm wrong, you're right. And that would be like a COVID type sell-off. It would take a black swan event, in my opinion, not a routine pullback. But I also think that, if you look at MSTU and MSTZ, these would be the canaries in the coal mine. I think these are the most volatile ETFs on planet or in the US. And they have 20% up, 20% down days, but not too much more than that. So they can handle, again, a couple serious pullbacks with being fine. They couldn't handle COVID, right? And we saw a bunch of leverage ETFs blow up in COVID. So I just don't think we get another COVID with Trump. He's just too into the stock market.
Vildana, final word?
I don't want to call out any one of these, but Eric, you don't think one of them can drop 40% without an exogenous event? I could see it happening.
It would have to be something specific to like MicroStrategy or NVIDIA. But NVIDIA's got so much going on. Even if it sells off, it might sell off 20%. I mean, it's not going to sell off 80% unless the whole thing's a fraud. MicroStrategy, okay, I mean, we know everything about Michael Saylor. He's clearly into Bitcoin. What if he got a new interest, maybe? I don't know. MicroStrategy is high beta to the stock market, and these are high beta to MicroStrategy. So the key is the stock market. If the stock market goes into a COVID freefall, then MicroStrategy is really in trouble because Bitcoin is high beta to the stocks. So that's my point on, you got to really have a negative view of the stock market having a COVID-like month to think this is going to blow up.
All right.
I will just add, if you look in December, the leverage MicroStrategy ETFs, those are down like 40% plus. And that was just a run-of-the-mill pullback in the broader market.
Yeah, but
really
the negative 2x went up 40%. And these people already love that. That's like a good day for these traders. But again, it would take a sustained like couple days, couple of weeks, I think, before this thing's. But that's why I'm not betting steak dinner, Nate. I would just say I would take the under.
Okay, so
how about we bet a nice glass of wine along with a steak dinner on this one?
Okay, dessert.
Okay, there we go.
I'll get you a Chiefs cake. No, not a whole cake, just a slice with the Chiefs colors. He's a
red
big Chiefs
velvet
fan.
cake.
Look, the Chiefs are the new Yankees and Duke. The most annoying sports fan on earth. Aren't you sick of Patrick Mahomes and these stupid State Farm commercials? And then Andy Reid completely embarrassing himself coming in. Oh, where's the chicken nuggets? It's like, get these people off TV.
Yes.
All right.
Hey, Joel, a fun fact is that Eric has lost another bet to me in the past, and I am the proud owner of a Patrick Mahomes jersey, courtesy of Eric.
That's why I am bloodthirsty.
Now we know. All right, on that note, Nate Geraci, thanks so much for joining us on Trillions. Vildana, welcome back. Thank you.
Go Bills.
Thanks for listening to Trillions. Until next time, you can find us on the Bloomberg Terminal, Bloomberg.com, Apple Podcasts, Spotify, or wherever else you like to listen. We'd love to hear from you. We're on Twitter. I'm at Joel Weber Show. He's at Eric Balchunas. This episode of Trillions was produced by Magnus Hendrickson. Bye.